Very interesting things are happening in the market. So let's get the big picture. First off, read this disclaimer carefully. So let's open the newsletter. These are some of the biggest news stories. So from Zero Hedge, Fed unveils new bailout program will provide up to 2.3 trillion US dollars in loans to support economy. I mean, this is just an extreme amount of money. The problem is that the money that just is created out of thin air, who has to pay it back? Well, it is the future generations. So definitively expect turmoil between the generations in the future. I mean, it is already actually happening. If you look at the trends on Twitter and so on and so forth, it's very clear that there is a deep chasm between especially the baby boomers and their children. Bloomberg. IMF sees world economy in worst recession since Great Depression. That is, not good news. So there is a bit of a difference here. This news about all of the money from the Fed. The thing is that it is bullish for the market, but it is all depends on how it is interpreted. Because if it is viewed as, a desperation, then it could, trigger a sell-off, even though, for all intents and purposes, more money being available will be bullish, but, artificially. It is basically the market getting life support. CNBC in New York now has more contagion cases than any country outside the US. Business Insider, the UK government reportedly believes the contagion outbreak may have started in a Chinese laboratory. Zero Hedge was banned from Twitter for stating this, but it is now becoming an accepted, very strong hypothesis about how this contagion started. And Times, Fed has more firepower even after $2.3 trillion plan. This is one of the reasons why you do not want to fight the Fed, but even though you might be very critical. I am very critical of the Fed. I am bearish long term, but I am what I call, I'm a normative bear. But whether you should be a bear in practice, that should be dictated by what is happening in the markets, because, CNN, and here is another, the final biggest news stories of the week. President Andrew Cuomo. So, there's been, after Bernie Sanders dropped out, the market rallied, but there is a major issue with Biden. Many people, Democrats included, are very skeptical of his mental health. He seems to have some signs of dementia. That is obviously not presidential material. Andrew Cuomo, though, has been very clear that he doesn't want to be president. But the thing is that it's a very high probability of Trump being re-elected. And let's now get into what happened, financially in the week. So you can see that stock market overview, the biggest performer tacking on 10%. Doom and gloom, it lost the most, but you can see here that the doom and gloom portfolio, it lost less than the stock market gained. And still, doom and gloom is the year-to-date performer. The big question is whether the recent rally we have seen, is it purely short covering? Could it become something that is more long-term for the market? It is very common to see bear market rallies that are very strong, and the next weeks are actually going to be very, very important. Individually, lumber is the best performer, tacking on 22% for the week. Crude oil, the weakest performer because the deal seems more murky. And let's look at some interesting numbers here. The WIX is still, it is going down, but it still is rather elevated, 202% year to date. Some of the biggest performers here, you can see that the Russell is the strongest for the week, and of all the stock markets here, you can see that the Nasdaq is actually the best performing. It is only down around 6% year to date, which is quite an impressive recovery. But then again, when you look at previous bear markets, we have seen this before. If you go here to country ETFs, you can see that Brazil, it was the big performer of the week. However, year to date, Brazil is the biggest loser. So it goes to show you that some of the biggest losers can become the biggest winners for multiple reasons. One thing is that the market becomes it is much cheaper. Another thing is, short covering. People have been extremely bearish on Brazil, so when there is a rally, you can very quickly get that short squeeze. So overall, this week was rather bullish for the stock markets, an average of 9%, so huge gains across the board. Only Saudi Arabia had a loss, but that ties into the pullback we saw in crude oil. When we look at category year-to-date here, looking at different regions, we can see that North Asia, it still is the best performing. So, performing better than North America. The worst performing is still South America at minus 36% year-to-date. Here we have the doom and gloom portfolio. Given that there were rallies in the stock markets, the bearish ETFs that you can see here, they did see pullbacks. Though gold had a strong week. Part of the reason why we are seeing the rally in gold is due to the central banks printing money like crazy. Year to date, gold represented with this ETF, it is up 11%. Substantially outperforming the stock markets. The S&P 500 is still down around 13-ish%. Fixed income, so you can see that there were quite significant gains for the week, 3% average. Some losses here and there, but overall, if you look at the 20-year treasury bonds, yes, we did see a pullback, but year to date, it is the strongest performer at 22%. This is one of the very interesting things at the moment, is that even though we have a week where we saw huge gains in the stock market, we also are seeing gains in the safe havens of, say, government bonds and gold, which are signs that people are not having, faith in this rally. Many people think that it is a bear market bounce. Having said that, it is very important not to fight the Fed, because the money they are pumping into the economy now, they are buying all kinds of fixed income, and they are literally buying ETFs. That is bullish. They're also going to throw money at the banks, and the banks can buy stocks, so the Federal Reserve is indirectly now also buying stocks. Long term, I still would make the case that that is not bullish. But when we are talking about trillions here, so yeah, don't fight the Fed, but I'm still very skeptical. I do think that we have a bear market rally. Here is the Forex market. So you can see that the US dollar had quite, pullbacks across the board here. Quite significant pullbacks, actually. So for the week, the highest performing is the Australian dollar versus the US dollar. The Aussie strengthening almost 6%. Let's go a bit further down to natural resources. So lumber is the king of the week, 22%. Year to date, the king of them all is gold. So the gold futures are up almost 15%. The huge loser is crude oil, minus 62%. So you can see that green energy is massively year to date outperforming fossil energy. Huge difference. You can see that, yeah, let's look here. Yes, the best performing green energy is solar, which I am a huge fan of. Solar energy went up 17% this week. So this was a huge week for solar energy. Really impressive. Let's go down to the metals. So the base metals, minus 17% year to date. The precious metals, minus 2%. But there's huge differences. Okay, gold, big performing. Platinum, pretty weak. Though silver had a very strong week though. 10%. And when we look here at the base metals, you can see that lithium and the steel had the strongest gains for the week. Then we go to the grains, then we go to the meats. So meats, huge losses, but feeder cattle and lean hogs are seeing some bounce, notwithstanding the downtrend. And then we have the softs. Orange juice is still the year-to-date king. So now we go to the specific strategies. So the high beta portfolio is the best performing, 19%. So you can see that low beta, 16, 19% here for high beta. So there is some risk on sentiment here. Though, if we look over longer time frames like year-to-date, we can see here that the market neutral momentum fund is still the best performing year to date at 24.34%. Even though we had huge rallies in the stocks, this week as well we did see here a nice performance from the market neutral momentum fund, 1.24%. A very impressive ETF. Let's now go to the sector ETFs. Let's move these a bit so we can get the performance like that. So, for the week, real estate was the strongest performing, a rally of 24%. But then again, that was a bounce because real estate has, we will see. Lowest performing is consumer staples. So there are signs that people are moving from the safer sectors into those who are at this point higher risk. Then again, many of those sectors that have plunged the most, if we look, year to date, when they move up, when they have a bounce, the percentage move, it is bigger, but it still is very far away from the high. Because if an ETF loses 50%, it would have to go up 100% to get back to even. So it's very important to be aware of how these percentages work. Anyway, this is obviously an impressive bounce here for real estate. Year to date, utilities is the strongest performing, minus 8.55%. Energy is the worst. Looking at individual items here, mortgage real estate highest performing for the week at 53%. For the month, we have something very impressive happening with the junior gold miners, a whopping 44.51% gain. That's an alternative way to invest in gold, is to get into the gold miners, because then you get these much bigger percentage moves. And there is a rather solid correlation between the gold price and the gold miners. And also due to the contagion lockdown, the miners are not able to mine. Hence, the the supply-demand situation for gold could become really interesting, and we could have some rather explosive moves if we see the lockdown continue. And if it is the case, as we saw in the biggest news, that the contagion started, it came from a Chinese laboratory, meaning this virus is bioengineered, then we really have no idea how this virus will act. So all of the lockdown, all of the costs associated with it, it makes perfect sense if we are dealing with some man-made virus. Then there is all reason to be really panicky, because they are artificial and could behave in completely different ways to what we know from our experience with influenza and other viruses. Basic materials, precious metals, best year to date. The silver miners were best for the week at 22%. So you can see some pretty substantial gains here in the precious metal miners. Also some love here for copper at 18%. Consumer cyclicals. Retail had a good week, 23%, but it is one of those that have lost the most year to date. So that's a classic example of how the biggest loser can also momentarily become the biggest winner. Here as well with leisure and entertainment, a 22% bounce for the week, even though it is the biggest loser year to date. Here is financial services, banking. Huge gains here for the week. Big losses year to date. Another, illustration of that phenomenon. And then you have real estate. Biggest winner of the week. 53% gain. That's huge. Very impressive. Biggest loser year to date. So I'm pretty sure you can see the trend here. There is this phenomenon, and that is something that you can capitalize on. If you want to be a bit more speculative, look at stocks that have been ravaged, ETFs that have been ravaged. If you want to make a speculative trade, go against, be contrarian, because then there can be these very big moves. It is much better than playing the lottery, at least. I mean, the lottery is just ridiculous. Playing the lottery is basically for people who do not really understand, probability. The options market, it's a very good alternative actually to playing the lottery. Consumer staples, alcohol and tobacco, the best performing of the week. Healthcare, an average gain of 12% for the week, rather impressive. Genomics, one of my favorite sectors, is the biggest performer year to date. Still down, but year to date is minus 0.66%, so massively outperforming the overall stock market. Utilities, very significant gains. Communication, you can see that the best performing is actually the media ETF, 16%. 5G, best year to date. And then you have the beleaguered energy industry. I do not have data here for oil and gas, the reason being that I get my data from investing.com, and after the stock split they have not recalculated the XOP. So basically I complained to them and they will fix it. But I am actively looking for any other service where I can get my data. But it is a bit tricky because many do not allow you to export in the way you want. So they are very it's a big thing. Huge moves though, even though there's been big losses over the longer time frames. Then you have the industrials. A whopping 15% average for the week. Drones are the worst performing. The best is Global Airlines, which is one of the ETFs I looked at for the week. So yeah, I'm quite happy that it is the best performing, though it begs the question, is this a dead cat bounce? And it really is to be determined. If I were forced to make a bet, I would say that we have seen a bounce in an overall bear market. I'm talking now generally. The only caveat I have is how nuclear the Fed is. The Fed is really beating the drums, and they are beating them hard. I mean, they are printing so much money, it's wild. Trillions, okay? So, do not fight the Fed when they are this crazy. However, it is easy to see how this desperation could be interpreted as something bearish by the market. It could very well be that, people will start to like take profits, go into cash, because this is just getting too speculative. Then we have finally technology. You can see that the biggest winner is clean technology, 15%. China is the biggest. Well, it had a gain, but it was the weakest gain, 4%, though it is the best performing year to date. Then we have the themes, like that and like that. So, the best performing of the entire week was the sell-offs. I have changed. I had this devastating sell-offs theme. I did some modifications, so I made it into the Contagion edition. We will get to that pretty soon. But huge gain for the week. Interactive entertainment was the weakest performer, but year to date it is one of the best. The only one better is blockchain. Looking at individual companies, BioLace had a whopping 162% gain. The reason being is that they are going to produce, I think it was ventilators, relating to this whole contagion situation. Yeah, that's a big move. Teladoc is still the king of the year-to-date performance. So here we have artificial intelligence, major gains. Batteries and cordless electronics, really impressive. I mean, huge moves here. As we saw in the market polls, there were some significant moves in lithium, which is reflected here in these stocks. Only China-backed battery has, a weak performance. Biometrics and cybersecurity. This is becoming a huge topic because we see that the contagion situation is used to drastically increase tracking of people. Like, I live in Norway, and our health authorities are making this app, which we have the option, at least so far, to download, and then all our movements will be tracked. The purpose being that if I, as an example, I walk and I come and I have been in close proximity to someone who had the contagion, then there will be an alert. Yeah. I do not think these tracking, all of the mass surveillance will go down. Only Aware, which is in the biometrics category, had a loss for the week. Then we have blockchain, very impressive year to date, huge gains for the month here, an average of 46%. Monero is the absolute king, but there's obviously something happening here in blockchain. Then we have clean energy, very good performance. Then we have cold value stocks, huge moves. These are stocks that have been rather ravaged year to date, so when there is a bounce, you can see some huge moves. Cybernetics and bionics, very impressive gains for the week, but over the longer time frames, it's pretty obvious that there are a lot of uncertainties in that industry. Though long term, looking like 5+ years into the future, I am extremely bullish on cybernetics and bionics. Though, let's be clear, some of these companies will have like a 10x gain, others will literally go to zero, because this is one of those industries where one innovation can catapult a company while also ravaging the other ones, because this is at a very early stage. Robotics is a growing thing, but it still is very, very early. And then we have the best performing theme, the sell-offs. So I did some modifications here. So I have cruise ships. They are obviously super affected by the contagion. Huge move from Norwegian Cruise Line. The reason why Norwegian Cruise Line is particularly interesting vis-a-vis Carnival and some of the others is because, you know, I live in Norway, so I do have some extra knowledge about that company. Though, of course, all of these cruise ships companies, they are in a particularly dicey situation because a lot of their employees are under these murky contracts, which makes it more difficult for these companies to get bailout money, because they are also registered in these strange locations and so on and so forth. You have the airlines, huge move here from United Airlines. The mall REITs, they also suffer because of the contagion. Gigantic move here from Massarish, 86% for the week. Down huge though, but when there's a move it's huge. Halliburton, the weakest performing, but still 8%. Then you have hotels and motels, Marriott International, Tupperware brands. This is of all of these, Tupperware brands is the one that is not, it is not like super direct related to the contagion. Then again, I do think this is a very interesting company, and one of the ways, a key part of Tupperware's business model is, people meeting in houses, and so they have this not multi-level marketing thing, but they do actively engage with their customers to also market their products through like social gatherings. So there are social aspects to Tupperware brands that make it sort of impacted by the contagion. Then we have MGM Resorts, casinos and gambling, and then coal in the retail space. I mean, just gigantic move, but year to date still deep loss. Discount retail, huge moves here. Best performing is still Walmart year to date. Dividend investor, Stanley Black & Decker, huge move. E-commerce, very impressive. Outperforming the S&P 500. Education disruptors, strategic education, and career education. Both are in what I call the career-focused category. Big moves. Environmentalism, big move. Femininity, 28% year to date. No, 28% for the week. Minus 26 year to date. Financial technologies. You can obviously stop the video when you want to look at things you find especially interesting. We have to speed through a bit here. Interactive entertainment. Internet of Things. Sensata Technologies, 23% for the week. Masculinity, 19%. Then you have the military industry. Big move here from General Dynamics. Raytheon, a major loss. Raytheon is the worst performing also. Yeah, worst performing across almost all the time frames. Then we have themes B. So here are the hated industries. Boyd Gaming in the gambling space had the biggest gain. Then we have nutrition and fitness. United Natural Foods, 14% year to date. Online video and audio. Netflix, the best performing year to date and for the month and over the last 3 years. Patient independence. So Teladoc. Glucose. Glucose is really struggling. They are in the cataracts and glaucoma business. Portable technology. Fitbit is the best performing year-to-date. Processing of information. NVIDIA, year-to-date, best performance. Robotics and automation. Big moves from John Bean and iRobots. iRobot is also the best year-to-date. Self-driving vehicles. Shit hits the fan, buy precious metals. Big moves. Significantly outperforming the S&P 500. And you can see some deeper blue numbers here as well. Newmont Mining is up 62% for the year. 63% for the last 3 years. Something is happening. Social media, space exploration, United Technologies, almost 30% for the week. Surveillance and security. Yeah, this is such a powerful trend, and yeah, it's simply just going to happen. When I was born, it was not that common to have video surveillance at malls and stores, but then they came, and yeah, it's become ubiquitous. People don't even think about it. But just imagine how frequently you are videotaped every day you are out shopping. I mean, it's massive. But we don't think about it. We have become acclimated to the situation. And I think it will be the same for the tracking of literally tracking where you walk related to the contagion. I do not think it will go away. So after the contagion is over, I think you will hear arguments that, oh, it's been so beneficial. We have been able to prevent crime. We have been able to help people in need. You know, some people fainted or had a heart attack, and we were able to pick it up and help out. And I mean, there will be all of these arguments in favor of it. So, yeah. Good luck to anyone who wants to maintain their privacy. It even doesn't work to move out into the woods. Something that happened in Norway is that there was related to the contagion, is that people who had cabins were not allowed to go to their cabins because the argument was that there was a risk that if they got sick, they would overload the local healthcare system. So if they did go to their cabin without being allowed to do it, then literally a branch of the military could come and get them. So, because they were threatening those very fragile rural healthcare systems. The international investor, Taiwan Semiconductor, the best performing for the week, but the worst year to date. Another great illustration of the phenomenon of how the biggest loser can every now and then become the biggest winner. Luxury and opulence, big move. Tiny challengers, huge move. BioLace, dentistry lasers. Well, they are also into other businesses. I'm pretty sure the contract they got was about the ventilators. I'm not perfectly sure, but I seem to remember something about ventilators. Then we have Toxic Energy. Chesapeake, the only one reporting a loss. Whiting Petroleum, even though there's all talk about bankruptcy, it had a move, 24%. The underdogs, huge gains here. Lumber Liquidators, Bed Bath & Beyond, JCPenney, Ford Motor. Pets, big moves. Weak WT Correlation. Coty. Workplace Disruptors, big moves. Yeah, I need to really pick up the speed now. Like that. Okay. That. So the best performing here for the week is the subsectors, 54%. Fixed income, being bullish, fixed income is the best performing year to date, 47%. Individually, you can see that home builders and supplies, the Bull 3X ETF, 106% for the week. The real estate bear went down significantly. So let's do it like that, and like that. So, yes, bullish stock markets, big move, but still big loss year to date. Being bearish stock markets year to date, yeah. Bullish countries, 33% for the week, still deep in the red year to date. Being bearish countries, huge loss for the week. Year to date is also looking at the loss. Bullish sectors, huge move, 43% for the week. Big move here from the real estate triple bullish ETF, but still year to date it is very deep in the red. Here we have bearish sectors, bullish subsectors. The winner is here, though year to date performance it is down minus 79%. Another great example of how the big losers can momentarily become the big winners. Bearish subsectors, bullish fixed income, very impressive year to date, the month, and also over the last year. Generally speaking, it is very dangerous to hold these leveraged products over longer time frames, but every now and then you do see that they perform well. But you definitively do not want to... Yeah, you cannot be passive with these products. You need to actively monitor their performance. Bearish fixed income not working out. Bullish natural resources. Gold, huge move. This is the triple leveraged, 36% year to date. Bearish natural resources, huge move here from year to date natural gas. Then bullish miscellaneous, basic materials bull 2x, 46% for the week. Then bearish miscellaneous, the big winner for the week. Japanese yen bear, but it is almost at zero. Year to date, the IAFA bear has a 29-ish% year to date. So, to sum up, this was a very interesting week. Huge gains, huge bounce for the bulls. Then again, it would be like ridiculous if we did not see a huge bounce given the news, okay? The news, as we saw, the Fed has gone nuts. They are all in. Trillions of dollars is now available to support the market. But then again, the most important thing is what happens the coming weeks. What is the fully digested reaction to what the Fed is doing? Will the interpretation be that the Fed has our back and we can just buy like crazy and we will have new highs on the S&P in the future, in the near future? Or will the interpretation be, which we are seeing reflected in the rally in these safe havens as well, that maybe there is a systemic risk connected to this money printing? Maybe it has simply gone too far and that there will be a reckoning. Whatever you do, of course, you want to let the trend be your friend and be incredibly careful in these times. This is literally the most volatile market in human history. Extreme moves.